Guys, my tenant destroyed my rental property. Alright, so most of the videos I've seen here on YouTube on the subject of real estate investing versus stock investing have not been made by people who actually truly understand how the stock market works. And that might sound like kind of a big claim, but by the end of this video, you will understand exactly what I mean by that. And it'll feel pretty cool being an insider. Now, I'm not saying that real estate investing is bad. There's definitely much worse ways you could use your money. But I'm gonna tell you 3 reasons why I personally will never buy a rental property. The first 2 you've probably considered yourself already. Maybe not every single thing I'll mention, but still. But the third reason, and particularly the why behind it, might just blow your mind. Reason number 1 I'll never buy a rental property is simply because I don't want to deal with tenants and I really don't want to have anything to do with them. Just scroll YouTube and you'll find no shortage of tenant destroys rental property videos. And yeah, sure, a lot of those videos might be overly sensational and once you actually watch them, it doesn't turn out to be that bad. However, I can say from personal experience, just from having friends and family that own rental properties and having spent some time in the mortgage industry, that it's really not too uncommon to get your house damaged by tenants in one way or another. Even if your house doesn't get completely destroyed, any amount of damage can be pretty costly and time consuming. If the damage is significant and you have to involve the insurance company or go to small claims court with that tenant, then it's gonna quickly have you thinking, yeah, this is consuming way too much time for something that's supposed to be passive income. Now, the other thing with tenants, at least in most areas of the civilized world, is that tenants have way more legal rights than you do as the property owner. Kicking a tenant out of your house might not be very easy if they want to be stubborn about it. And if they decide they want to stop paying rent, then it can take a long time to actually be able to get them out of your house. Any of these things that take up your time or your money end up eating away at the return on your investment. You could hire a property manager to look after the property and deal with your tenants for you, but there's obviously a price to pay for that, which ultimately will result in your overall return on investment being lower. Now, buying a commercial real estate investment property could be an alternative if you want to minimize the risk of getting a bad tenant, but there's pros and cons to that as well. Owners of commercial properties typically have more legal rights than owners of residential properties, so kicking tenants out if they decide to stop paying is way easier. And because tenants are mostly only there during working hours, it means that there's just less chance of damages. However, the downside of commercial properties though is that 1, it's usually harder to get financing, and of the lenders that will do the financing, most of them want at least 50% down payment. But second, and we'll touch on this point coming up in this video, but it's just gonna be really difficult to find any great investment opportunities. But we'll get to that. Reason number 2 that I will never buy a rental property is the lack of liquidity compared to stocks. Now, liquidity just means the ability to buy and sell very easily. If someone were to say, I'm gonna liquidate all my investments, for example, what they're saying is that they're just gonna sell all their investments and turn it to cash. Now, this particular reason isn't a huge reason for me because I typically only buy stocks that I'm okay with owning pretty much forever, and I'm a very reluctant seller, so I'm definitely not someone that's in and out all the time. And now I am gonna get into more detail about stocks in just a second. However, that is one thing that stocks definitely have going for them that real estate doesn't: how liquid it is. You can buy and sell shares of stock very easily, and the fees to do so are practically nothing. Real estate, on the other hand, is much less liquid. There's some costs to buy, and the cost to sell a property is pretty high. 3, 4, 5% realtor fees are pretty typical. And if you're gonna be breaking a mortgage, that could mean paying a penalty, legal fees, etc. And so if the property grows in value by 5% per year on average, just as an example, well then you're basically forfeiting a year's worth of that profit when you sell your real estate. Real estate investors would definitely tell you, and I would agree, that if you're buying a rental property, you should really plan on keeping it for a very long time. The bottom line with this point is that real estate is much less liquid, which means less options for you. Now, I like having options for one thing, but also stocks being as liquid as they are also has a side benefit, which is not immediately apparent, but you're gonna learn about it right now. Reason number 3 really gets to the heart of why I will never buy a rental property. And this is really the main reason. I mean, not wanting tenants is a close second, but here it is. I'm gonna get better investment returns by investing in stocks. And by the way, I do not mean by doing anything that resembles gambling or speculating or anything that's extra risky to get those better returns. That's not what I'm talking about. If you've watched other videos of mine, you already know that I'm a very rational investor, and there's really just not a single gambling bone in my body. And so the reason why I will get better returns with stocks is basically due to this one thing. It's due to price efficiency. So check this out. Real estate prices are typically gonna be pretty efficient. And by efficient, all I mean is that real estate prices are usually gonna be pretty accurate, meaning prices are gonna accurately reflect what the property is actually worth. And because real estate is pretty efficiently priced, it means that it's gonna be much more difficult to get any great deals. Stock prices can often be much less accurate, and therefore it can be a lot easier to find great deals and great investment opportunities. That's what value investors do, by the way. They buy stocks only when they're trading at a price below their fair value. Now there's two main reasons why stocks are less efficiently priced than real estate. To begin with, listen, no one's ever panic sold their rental property. Now on the other hand, people panic sell out of their stocks like all the time. It's kind of ridiculous. People even put stop loss orders on their stock positions so they can automatically panic sell without even needing to actually panic. Now we talked about liquidity in reason number 2, and this is one of the byproducts of liquidity. So liquidity is one of the causes for price inefficiency, yeah, but the second reason why real estate is much more efficiently priced than stocks is this. Investing in real estate is a very simple to understand concept. I've never met anyone that just simply couldn't wrap their head around it, right? It's pretty simple. You buy the property, you rent it out, you collect the rent, that rental income pays the mortgage and the taxes, and ideally there's some cash left over on top of that as well. And that's basically the generally accepted strategy when it comes to real estate investing. And it's a very intuitive strategy. The plan for most people following that strategy is simply to use the rental income to pay off the mortgage, and then one day, once the mortgage is paid off, that rental income can go straight into your pocket instead. Pretty simple, right? And pretty much anyone, even small children, will be able to understand that idea pretty easily. Now, stocks, on the other hand, are not so simple and are very misunderstood by most people. And that's even in spite of the fact that buying stocks is very similar to real estate investing in many ways. And by the way, I'm not even just talking about those people who've spent zero time learning about stocks. I'm talking about even people who consider themselves experts. Even people who have been so-called financial advisors for their entire 30-year career. I'm not joking. And honestly, it's like the weirdest thing to me. Now I know some of you are nodding your head along because you know exactly what I'm talking about, but I also know some of you have a skeptical look on your face right now and you're thinking, okay, smarty pants, why don't you just tell us the big secret then? So let me give you a little background so it all makes sense. Warren Buffett is the most famous value investor there is. He's one of the wealthiest people in the world, and he's practically dedicated his life to teaching the art of value investing to others. Now in 1984, when he was 53 years old, he wrote this article called The Super Investors of Graham and Doddsville. Graham and Doddsville because Benjamin Graham and David Dodd basically wrote the book on value investing, literally. Ben Graham was also Warren Buffett's teacher 3 decades earlier. Nonetheless, the whole point of this article ultimately was to destroy something called the efficient market hypothesis. Now, the efficient market hypothesis theory says that all stocks are always perfectly efficiently priced at all times. That stock prices reflect everything that is known about a company's prospects and about the state of the economy. There are no undervalued stocks, these theorists argue, because there are smart security analysts who utilize all available information to ensure unfailingly appropriate prices. Now, Buffett does a great job with this article in his task of destroying the efficient market hypothesis, and I'd encourage you to check out this article if you have any doubts about value investing. But I want to now direct your attention to one little section of this article that's often overlooked. Buffett says, "It's extraordinary to me the idea that buying dollar bills for 40 cents takes immediately to people, or it doesn't take at all. It's like an inoculation. If it doesn't grab a person right away, I find that you can talk to them for years and show them records, and it doesn't make any difference. They just don't seem able to grasp the concept Simple as it is. A fellow like Rick Guerin, who had no formal education in business, understands immediately the value approach to investing, and he's applying it 5 minutes later. I've never seen anyone who became a gradual convert over a 10-year period to this approach. It doesn't seem to be a matter of IQ or academic training. It's instant recognition or it is nothing. Wow, that's pretty interesting, right? You know, he's basically saying that the ability to understand this is almost like something you're born with. Now, don't panic, by the way. You're not expected to get it if it hasn't been explained to you yet. And I have not explained it to you yet. I had my light bulb moment when my friend Flores invited me to a Berkshire Hathaway shareholder meeting down in Omaha, Nebraska some years ago. So I wasn't just born with this knowledge, and you're not expected to either. But once you know, you can't unsee the matrix. And now, teaching this stuff to people like my past self is kind of like my calling. If it wasn't for my friend inviting me to that shareholder meeting, it might have been years before I figured it out. Or maybe I just never would have if it was never shoved in my face like that. Okay, I guess I got a little sidetracked there, but let's go back. Real estate prices are much more efficient compared to stock prices because everyone understands real estate investing. It's very predictable, and particularly for commercial real estate and multifamily properties, the decision on how much to pay for an investment property is purely a rational, numbers-based decision. Yes, when it comes to single-family homes, prices can be less rational. And this is because your competition includes buyers that are also buying their personal residence, and this is much more of an emotional decision and much less of a rational numbers-based decision. And basically, as soon as a buying decision is an emotional buying decision, prices can become less and less rational. However, this more often ends up from making properties becoming overpriced, not underpriced. Real estate can occasionally become underpriced in an extreme way when there's some serious panic and chaos going on in the world. And particularly in a scenario where banks stop lending money, which causes the demand to go away. And while at the same time, everyone is temporarily desperate to sell, which causes supply to skyrocket. Now, by the way, if you're watching this and you're absolutely set on investing in real estate, here's how I would do it if I was going to. I think the best way to do it is to buy a single family home which can be converted into a legal duplex. Then you do the conversion, you rent out both units, and then you refinance to pull out as much equity as you can to get back what you put in to do the renovation. And then basically just rinse and repeat. Do this as much as you can. There are a lot of real estate investors that are looking for these types of properties though. So again, it's gonna be hard to get a good deal. And also, don't expect it to be very passive income, but I guess you should know that by now already. You're gonna have to get down and dirty with it if you want some significant investment returns. Now, real estate investing has one other big benefit that I wouldn't be giving you the full picture if I were to end this video right now without mentioning it. The biggest benefit by far when it comes to real estate investing is that it's easy to borrow money to buy rental properties. Much easier than borrowing money for the purposes of buying stocks. And you can borrow at very low interest rates and attractive terms as well. Not really possible in the same way when it comes to stocks. If you're buying a rental property, you're probably gonna need at least 20% down payment, depending on where in the world you are. That's pretty awesome. Essentially, you get to benefit from owning an asset 5 times the size of the amount of money you need to actually put up yourself. Now, another name for this is called using leverage. And leverage will definitely have the effect of beefing up your returns on your invested capital. In fact, buying a rental property without getting a mortgage would be basically completely missing the point of what makes real estate investing good. You can borrow money to buy stocks. However, you're just not gonna be getting as good of an interest rate or as good of terms, and certainly not as much money as you'd like. Now, if I've intrigued you with this video at all, please consider subscribing and check out this video here, by the way, if you wanna learn about value investing.